I did hear that you lost like 3 years' salary in 72 hours, was it? So some exorbitant amount of money. I mean, can you talk us through that day?
Yeah, that was actually not too long ago. I mean, a few years ago. It was a crazy story for me. I traded SPCE. It's Virgin Galactic. It's a company of Richard Branson, one of the billionaires in Britain. And basically, they're flying to space and such. And I started to trade it free market. I was up about $2,000. And but it wasn't enough like to take profit. It dropped down, and I started to add to my position, and actually adding to the position as it continues against me. And that was the part when I crossed the boundaries. I knew that I'm willing to take a loss of $10,000 to $15,000, but it went down so aggressively that day. It was a Monday. It went down so aggressively that day, and I couldn't do anything about it. Didn't take that loss of 10, 15,000, added more to the position, started to fight the way against it. The broker actually took my buying power down by half because of the volatility, specifically for that day. So I couldn't add even more to the position. I was stuck. 2 hours later, I'm down 25K. A day after, 40, 60. And then on Wednesday, I closed the position with 91K loss.
Damn.
That was a shocking for me because Cam, I already knew what I was doing, right? I was super profitable. Everything was great. And all of a sudden, one trade that shook me completely. And, I crossed all the boundaries, all the limitations, everything that I knew and traded with. I just put that on the side, and it was a hard 3 days, even more after that, 2 weeks that I didn't touch the keyboard. And
yeah, I could imagine. I mean, and did you take any lessons away from that other people can learn from?
Yeah, tons of them.
All right, folks, here we are on Trading Up. We've got Michael Katz in the house now. He's a 15-year day trader. He's been trading stocks and futures. We've got him on the show, and we're going to be able to pick his brain and find out what he does, and even jump into a chart after this interview and find out exactly how he breaks down the market. So welcome to the show, Michael.
Hey, thanks for having me, Ken. Yeah.
Well, look, to start off with, why don't you give the guys a bit of a potted history as to like your trading career and how you started and got into it, and then we'll dive into a bit of the detail from there.
Yeah, sure. So I started probably like anyone else, early 20s. I was a gamer, basically. I used to play a lot of shooter games like Counter-Strike. So it was kind of very easy going for me to go from playing a game to trading. My ex-girlfriend bought me Robert Kiyosaki book, Rich Dad Poor Dad. I started to get familiar with stock market and all of that, and just started to trade on a demo account, finding my way. I had tons of ups and downs, and finally found that spot where I can say, okay, now I'm profitable. How do I continue and increase that? It was a roller coaster, no doubt.
And can you remember like the sort of like the big thing that stopped, I suppose, that transitioned you from being someone who was struggling to being a profitable trader? Can you remember that, like the actual tipping point, the turning point for you?
Yeah, like anything in life, it's not happening. In most cases, it won't happen just in one day. I didn't go to bed and wake up the next day profitable, right? It's like going to the gym. You first start, and it's hard to do that, and you have some pain in your muscles, and then a few days later, it's easier, and now you're getting more weight and all of those things. So it wasn't really a specific moment, but there are definitely two major, two key levels that got me into that profitability. One is that I took out the P&L. So in most cases, when you're trading and watching your P&L go from $100 profit or loss, it will start messing up your mind, right? It will start affecting your judgment. So once I deleted literally the window of the P&L from the trading platform, it was much easier to focus and stay connected to the trade and not to the I'm losing and winning, right, on the dollar side. And the other stuff is not timing the market. All the time when you're trading, at least in my beginning, I was trying to look for the exact moment to click the mouse key and enter a trade. But in time, when I understood a little bit more about market structure and the way the market works, basically, it was not about timing the market. So I can get into a position, and as long as I'm managing my trade right and the risk, obviously, I can get it to be a profitable trade. And those two elements was actually the one that were actually the ones that pushed me into the next level.
That's interesting. So timing the market, I've not really ever heard anyone talk about that. So can you kind of dive into that and explain what the difference is between like trying to get the exact moment to enter a trade and then just getting in a position and still coming out profitable? What's the difference? Hey, start trading Forex indices and commodities with up to 800K of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450K in funding with 100% profit on your first 15K. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit BlueGuardian.com or BlueGuardianFutures.com to start trading today and grab their limited time discount code.
Yeah, for sure. So, let's take like the simplest one, right? You're looking at a pullback. So you see a chart going up, pulling back, sitting on a key level, let's say a VWAP, for example, some indicator, and then you're waiting for a reversal candle, let's say a morning star or even an hammer. So in most cases, you will enter a trade just above the reversal pattern or reversal candle, and you put your stop loss below it, right? That's the classic one that everyone's talking about in books and in videos or whatnot. But in most cases, those trades won't work to your favor because there are lots of games around those levels, right? The algos or market makers, they will let you get into that trade, take your stop loss, stop hunting, all of those things. And what I found that will be much more beneficial is if you will go into a trade, but you don't actually need to click the mouse key right when it break through the pattern, right? When it breaks reversal candle. You can enter a little bit before, a little bit after. The thing about trading, again, in my eyes at least, obviously there are many ways to take it and trade, is actually getting into a position with a small risk and adding more as it goes to your favor or against you, as long as you're within the risk parameters. Maybe we will talk about it later on in other cases, and also once I'll share some of my stats. But you will see that in most time you don't really need to time the market. You just need to understand that this is the area that the market will shift, the area, not the exact moment.
Yeah,
and that tremendously changed my trading.
Yeah, so that is quite a unique approach. I mean, was it the fact that, like, say for example, you put a smaller position on, and you had your stop loss in place, and then the trade didn't really get to go where you thought it was going to go, hits your stop loss, and you're like, okay, well, I've only taken, like, let's say 0.25% of the account instead of 1% of the account. Was that kind of how it worked?
Yeah,
okay.
Basically exactly like that. So you have more the flexibility. You're more agile about adding to your position or getting to another position again because you just lost a tiny bit. So it's not about really clicking the mouse key right at the dot, right when you think that market will go up to your favorite, but actually just understanding that this is the area it should go. I don't know when it will start, right? It could be in 5 minutes. It could be in 10 minutes. And I need to be more flexible about the trading.
And so for someone who's like wanting to go away and back test this and go, I want to put some data around it to know that my setup, whatever it is going to work over the long term. And does that would you back test that kind of way of entering the market, or is it more just a case of the back test is separate, gives me confidence, and then this just helps me with psychology and that kind of thing?
Yeah, both. I mean, first of all, you backtest just to understand that you have like a case here, right? So you understand that this approach is right for you, but you gotta remember that backtesting is fine until a certain point, because backtesting is theory, right? It's going back and try to test it. In most cases, it won't take. In all cases, it won't take your judgment, right? Your decision making in real time. So you got to understand that the results that you're getting from backtesting will be different in real life, right? Because the decision making will take some of the profitability out, probably. So you just need to remember those kind of elements. So backtesting is great, but till a certain point.
And that, look, the CEO of Trade the Pool, you've obviously probably got a busy life. What kind of time frame do you use to manage, getting into the market, trading on a daily basis, and then also, having time to go to meetings and all that sort of thing?
Yeah, so back in the day before Trade the Pool, I was trading 1 minute chart, really hardcore, super fast on the keyboard. Usually traded not more than 2 hours in a day. Was really short-term trader, real day trader, hardcore. Obviously, as I continue and joined Trade the Pool, time was kind of hard. We got tons of meetings every day and a bunch of stuff that we're working on all around the clock. So basically, in most cases, I will trade an hourly chart, maybe a 4H, but those are my time frames. Yeah.
Okay, cool. So you've got time to obviously, place your trade when you got some time and manage it going forward. Now, going back to like when you were, started turning that corner, you were profitable. I mean, did you ever have any setbacks that you had to come back from during that time?
Yeah, I mean, it's always like a back and forth, right? You just if I always compare it to football or soccer, NBA players, because it's basically a performance based what we do. So we always gotta, on the mental side, always gotta work on that and figure out a way to stay focused and stay on top of the game. And on the technical side, understand what we need to do in order to improve ourselves. For example, when I became profitable and now I'm, let's say, trading 500 shares or risking $500. The fact that I want to go to $1,000 risk, it's a huge jump, right? And mostly on the mental side of it. Because in most cases, I'm trading stocks that are very volatile and lots of volume. So that's fine. I can add to the position pretty easily. Even if I'm trading, I used to trade 20 and 30,000 shares. So it was fine to add to Apple or Tesla, Amazon, whatever it is. But on the mental side, risking 1,000 instead of 500, it's a complete different story. Because even if you're not looking at your P&L, you know what you're risking. Yeah. So the decision making in that part is very hard to tackle. That's one thing that I would definitely recommend traders that listen in right now. When you're doing that shift, when you're jumping from 500 or $100 risk to 200, you got to have that extra step in the way. So it will be 100, 150, then 200. Don't try to jump from 100 to 400, right? Because in most cases, it won't work. And I did that many times until I failed. And then I understood, okay, I need to take it one chunk at a time. So this is definitely one to.
Because I did hear that you lost like 3 years' salary in 72 hours, was it? So some exorbitant amount of money. I mean, and did you take any lessons away from that other people can learn from?
Yeah, tons of them. I mean, first of all, is really to take those few days, weeks off. That was literally the first time that I took so many days off the keyboard. Not looking at the screen, not touching any trade. So that's a good thing to take the time off to reassess. Obviously, I went through the trades tons of times, because if you look at the chart back then, I had like maybe 400 or 420 entries and exit on those 3 days, like just adding to the position, taking some off, adding a little bit more, taking some off, playing with it all the time. So I went down and looked at every execution, tried to analyze that and understand what I could have done better. For example, waited for key levels to add with a little bit more confidence. That was one. And of course, the top in the list is just sticking to the rules. If you're willing to lose $100, get that $100 and get out of that trade. Take that loss, and tomorrow will be another day. And funny, Space at the Virgin Galactic, SPCE, they announced when they launched a success launch to space on that day, on Monday, when the stock started to collapse. So it was like buying the rumors, selling the news, and I was actually buying the news. A great day, and I started to buy. I don't know how I fell into that.
Thanks for sharing that. Now, what about, I suppose, if you had to sort of look at where your trading is now and go, right, what am I going to improve next? Are you in that position where you're thinking, I do need to improve a few things? And if so, what are they?
Right now, you mean?
Yeah, right now.
Yeah, so for now, it's mostly on my side. It's mostly working on still figuring out my stats, always checking them back and see what I can do better. For example, if I'm adding at the right time, if I'm still analyzing correctly and finding the right areas that the market should shift, because I'm mostly buying the dip trader, or selling the top. I'll share that later on the charting. But basically, just on the technical side, just trying to craft it just a tiny bit more. On the mental side, I believe I'm pretty strong. So as long as I'm staying within that area where I feel comfortable, I think I'll be all right. But it's always a back and forth, and it plays with your mind.
And do you have any sort of like insight from working at Trade the Pool to how other traders fare and where they go wrong and all that kind of thing?
Yeah, for sure. I mean, the first thing that comes up when you're looking at the stats of the traders, those that don't succeed, is that they're just going too strong to a trade, oversizing basically. Again, instead of they got enough buying power to play with, basically. So instead of risking it like they should with the right trading plan, they're actually going in and doing one lucky trade, just trying to reach that goal very, very fast. So this is the first thing that it's super hard for traders to do, just to handle their risk size. And I'm interviewing all of them when they pass the evaluation and getting into the funded stage. So they're all saying that most of them, it will take them like 2 or 3 attempts to pass the evaluation. And they're all saying the exact same thing. It's hard for them at the beginning to just control the risk, not getting into that one lucky trade mode. This is one thing. And the other stuff is also about managing the trade correctly. Just getting out of that trade very, very fast. If you already found the right trade, you did your analysis, you did everything perfectly, wait a minute in the trade, let the trade work, and then exit the trade, scale out from it. Don't run from that trade. You're already making that money, right? You already did all the hard work of finding the asset, analyzing it. Just wait a little bit more. Give yourself that chance, or give the trade a chance to work.
Yeah, it's good advice. And in terms of like I suppose the traders that have gone through and got funded, how many keep the account, and have this consistent trading career that goes on for a long time versus lose their funded account or and never come back? Or I mean, what percentage would you sort of say get through and become that trader that's, making a consistent living?
Right. So that's a great one. First of all, regarding the percentage that passed the evaluation, we're talking about between 20 to 25% which is amazing for a trader. Because we do have traders that didn't succeed on their regular account, like a broker account, but actually on the funded account, they're making great amount of money. So that's incredible to see. Maybe we'll talk a little bit more about prop in general, the benefits of it. And the second thing is, when you're watching those funded traders, there are traders that have been with us from the get-go, literally trading almost 2 years, making money consistently. Some of them along the way blew 1 or 2 accounts of the funded account and then got back, did the evaluation, pass it, because they already understand, they already have all the things they need in order to pass the evaluation. They understand the concept, they know the rules, they know how to trade. So they easily pass the evaluation, get funded again, and started to trade on the funded account. So some of them have 3, 4, 5 accounts, funded accounts as well. Yeah, so it's a mix between everything,
Okay. And you said you had a track record that you were going to show us and walk us through. Do you want to quickly pop that up and we'll have a quick look at that?
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from 1 lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Okay, so Trader Pools is part of a bigger group of 5%, or the fivers, and basically I've been trading it for the last year or so, just because I'm super busy of doing Trader Pool, so I have a little bit more easygoing trading the NASDAQ, the future NASDAQ, and because it's running 23 hours a day, it's easier for me to find that trade. So I'm trading a program called Hyper Growth. I started with 40K, reached the balance needed, then basically there is a great scale to that program. So jump to the 80, then 160. Now I'm trading the 320,000. Took a loss just the last Friday, but basically doing a very nice consistency movement. If I'm going into the charts, you can actually see all the numbers here, all the stats of the program. Let me maybe zoom in just a tiny bit. Okay, so I'm at 90% of win rate, and that's pretty decent with 11.26 profit factor, which again, this goes back to what we talked about before, is that the fact that I'm not trying to time the market, I'm not trying to click the mouse key at the exact moment, I'm actually giving it that space to work. That is why I'm getting into that percentage. And again, obviously, it won't stay 90% the whole time. It will move probably to the area of the 85, 83%, but still that's a very decent win rate. And also the profit factor. So I'm not taking my trade right, not letting him work, right? I'm giving the chance to the trade to actually work to my favor. And you can see that the average trade duration is actually 14 hours, right? It's futures, so I let it run just a little bit more. Other than that, you can see roughly 116 trades, all of them on NASDAQ.
And how many trades would you typically take on one position?
So because it's trading on the fivers, it's not a netting account, right? So it's edge account. So for each one, you can see that I'm adding to the position. For example, let's say this is the 7th. Okay, so this is the first start of that trade, and I took, it's like 5, maybe 10, 12 chunks, like in one position. Or this is the 9 things. So you got 5 of them, 6 of them. The 12 only had 3. But in most cases, I made around between 5 to 10 chunks, like scaling execution in basically with those trades. So, and this is the chart. Roughly, you can hardly see any pullbacks or any drawdowns, but that's the same thing. And I had, if I'm going back to the one before that, you can see also pretty nicely, besides the fact that I did have some rundown of a few, I guess, it's a day and a half. The rest was very consistent. Here I was up, success rate, win rate was 68%, profit factor 1.8 because of those 2 losses. And
it's interesting. You made it back quite quickly on that one. That like one trade there that just jumped the account back up to.
Yeah, I did have a nice one. It's let's say August 6th.
It's funny that back. Like it's typically the way you have like a bunch of losers and then all of a sudden you have this really good trade. I mean, I've don't know how many times I've had that.
Right, that's true. And I was a bit more aggressive here, but again, I'm okay of being aggressive when it comes to finding, like if I'm convinced that this is the main area, this is the right area for this the market to shift back up or down, then I'm okay of being aggressive, right? But the most important thing is stay within the risk parameters. That's one of the hardest stuff to do, right? But this is definitely something that once you get the idea of it will change your trading.
Awesome, brilliant. Well, that was fantastic to see. Folks, if you're listening to this, just head over to the video and you'll see it there. Now, what about like breaking your sort of trading style down? I mean, how would you classify it, and what kind of techniques or technicals do you include in what you do?
Yeah, so I keep it very simple these days. If I'm going back just a tiny bit before that, I used to trade a lot of stocks in play. So any stock that popping up because of earnings or any type of news, I was mostly trading those. Then shift a little bit to more big techs like Tesla, Amazon, Google, and traded those very frequently. And then the Nasdaq. But all times I stayed with the same concept of, first of all, keeping the chart naked. Like I'm watching the price action mostly. That's the first thing. Because remember that, indicators are a reflection of the price, right? Or volume. So if you're looking at EMA, for example, exponential moving average, you're basically looking at the chart close period of time that you choose. So the best part is to understand the momentum and the price action, and then go and add a little bit more indicators just to help you complete the decision. But focus, in my opinion, at least focus on a naked chart. And what I'm trying to do is just find those areas of major supply and demand when the market should shift or the asset that you're trading should shift, and then executing and managing as you saw on my account. So pretty straightforward, right?
Yeah. Now, what kind of things in the industry do you think people, or just in the trading space as a whole, do you think people should be avoiding rabbit holes they might get suckered into? What kind of things?
First of all, get rid of the Ferrari dream, right? I mean, so many guys are looking at YouTube and trying to. There are so many. Let's call them gurus that selling the dream of the Ferrari. Let's face it, most cases, the guys that listen in right now, you would be amazed if you can make $10,000 a month with your trading, right? With your strategy.
Oh, yeah, exactly.
Exactly. Yeah. So you don't really need to look for a 7-figure trader and those bunch of stuff, because eventually most traders will be happy with those $10,000, and that's the focus that you need to keep yourself in, and not thinking about how I make billions of dollars. It's actually about making consistency. So first thing, try to avoid that feeling or thoughts about I'm gonna be rich, because it's not about that. It's about consistent and long term. Even if you're a short term trader, it's staying in the game for a long term, right? It's not having LeBron James didn't have one amazing game. You have several of games, great games, several of times, right? For many years still. So that's first thing to keep in mind. And the second thing is continue to be humble, even if you're making it, even if you became profitable, because there is no holy grail, right? So you found the way that works for you. You found this edge. Stay within, trade, continue to trade it, and don't think that's it. I'm at the top of my game now. Nothing can shake me. Nothing can harm me. You just need to continue to trade slowly, as you already did yesterday, and be humble about trading.
Nice. Now, a bit of a weird question to end things off here. So you're a gamer turned trader. What kind of things from the gamer experience that you had were beneficial going into trading?
Yeah, on the technical level, I was very fast on the keyboard, and I still am, even if it's been like 20 years or so. So that definitely gave me a great edge when it comes to just clicking the mouse key, adding to the position, all of those things. I was very into computer in general, so it was easier for me to stick around than watching the screen all day. I remember my mom used to call me to come to lunch when I was playing games, to lunch and dinner, and I didn't go. I just sat down and stare in front of the computer and play those games. So that was pretty much the same thing for me in trading. And the other part is just a decision making in real time. When it comes to when you're playing like Counter-Strike games, when you're a first shooter, you always need to make a decision in real time, right? Aim very carefully and watch every corner. And this is roughly the same when it comes to trading, especially if you trade in a 1 minute chart. You got to be very fast in your processing and all of that. So that definitely helped me.
Brilliant. Now, you've given so much great advice in this show. I want to pull out one piece of advice you want to leave everyone with, which would probably be like, if I'm going to tell you anything, just one thing, what would it be?
Yeah, finding the edge. It's obviously a lot of the guys talks about it, and you need to find it. But the way to find it, I guess, is first of all understanding who you are as a trader or as a person in life, right? So, for example, if you have time to trade, if you're trading, depends on where you live in the world. Maybe you want to trade stocks, but you live in Japan or something like that. Then you need to understand that you need to be awake in certain times, right? So first of all, just understanding your time and personality. You want to be a day trader, but you don't really make decision really fast, or you're too scared, or those kind of elements. And after that, when you getting into the groove or getting into your rhythm, stick to one strategy that works for you, maybe two, not more than that. You don't really need more than that. And then start to analyze the stats, that you're doing all the data basically to find really where your best spot is. For example, when I used to trade mostly stocks, I used to go to my trading journal and then finding, okay, on Mondays between 9:30 to 10 on stocks that have high volume and ATR of at least 2, I'm doing the best possibly can, right? So those are my profitable days. But on Wednesdays, when I'm trading on the same hours, like between 9:30 to 10, but the ATR is only 1, the average true range, is only 1, then I'm doing much less or losing on that matter. So just finding those areas when you connect everything together and say, and this is the bottom line. When I'm trading XYZ, that's the best me.
Yeah.
And when you have it, that's your edge.
Yeah, as my mentor said, it's almost like, give yourself as many advantages as you can. Mm-hmm. And if the ATR being higher is an advantage, trade when the ATR is higher. Don't, give yourself a disadvantage by trading, at a stupid time when price just isn't going to move. Right. Hey, look, Michael, it's been fantastic having you on. What's the best way for folks to find out more about you, get hold of you, that kind of thing?
Yeah, just go to tradeapool.com. You will have all the information you need about us and about the trading evaluation and how to become funded. And I'm also specifically on Twitter. So check Michael TTP. You will find me there.
Brilliant. Well, folks, what we'll do is hook links up to that underneath the video here. Whilst you're there, click subscribe, like, and that notifications bell, because you don't want to miss the charting video we're just about to record with Michael here to find out what he actually does on the charts. So we'll see you in that one.